Good morning, good afternoon, good evening from wherever you're watching me from. Welcome to Capital Counsel, where we simplify corporate governance, company law, and capital markets matters. So we are going to talk about an interesting topic where you and I have interest. Safaricom is about to hold one of the most significant annual general meeting in its history. And you might ask me why, so stay tuned and listen more. Shareholders will be asked to approve the financial statement, declare dividends, elect directors, and appoint auditors. This is usually routine, right? Every AGM, given it is a requirement by the Companies Act that auditors are appointed on every AGM. Each committee is appointed during every AGM. You elect new directors every AGM, maybe a declaration of dividends or not in every AGM, and approval of the financial statements. So this is usually a routine thing or something that happens in every AGM, if you ask me. But beneath this ordinary resolution lies a governance decision that could reshape one of Kenya's largest listed companies. Come to cost us, who knows? It might come to benefit us. Who knows? Only time will tell. Following Vodacom Kenya's acquisition of the Government of Kenya additional 15% stake, controls approximately 55% of Safaricom, making it the majority shareholder. At the upcoming AGM, shareholders will consider a series of special resolutions to amend the company's article of association, that is one, including changes affecting board appointments and the nomination of the chief executive officer. Usually, I think it used to be bidded and all that, but now the majority shareholder will have to determine this, yeah? This. You know what it means. Today, I'm going to explain what the AGM resolutions are, why they matter, what they mean to minority shareholders, what they could mean to the NSC and corporate governance in Kenya as a whole. So let's begin. This resolution was to adopt is to adopt the annual report. Every AGMs begin with the shareholder receiving and considering the company's audited financial statements. And just before we get to this point, shareholders will receive a notice of the AGM, upcoming AGM. So in this sense, they will receive this notice, they will choose to whether register or not. So if they go ahead to register, so under the notice, they will see the resolutions that are supposed to be voted on. The resolutions that are supposed to be voted on. And they'll choose to vote during the AGM or not, or stay away. They will also choose to register to attend the AGM. If they don't register, even though they are shareholders on record, then they will not attend this AGM because they did not register for the same. So it cannot be a last minute thing. Usually, a company gives 21 clear days or calendar days before the actual AGM happens or take effect. As I said earlier, AGM begins with shareholder receiving and considering the company's audited financial statement. And this is not just a procedural requirement. It is the moment where directors account to shareholders for how they have managed the company over the past financial year. And this will have all the remuneration or whatever they have received, the incentives they have received during the financial year. Safaricom has reported another strong year financially, including profitability and a proposed final dividend, which still requires shareholders' approval. So once shareholders approve this, then the same can be paid. If they do not approve this and during voting, then the same resolution does not pass. The lesson here is simple. Financial performance is important, but governance is equally important. So when we look at the second resolution, approval of the final dividend, one of the resolution asks shareholders to approve the proposed final dividend payment. Many retails, I believe we all know about dividend, and if you don't know, kindly check the channel and you'll be able to find the descriptions of all these all these terms that I'm using here. But dividend is basically a payout that you receive if a company has performed very well in the last financial year. So that is the income you receive from your investment. Yeah. So it has a percentage. If you calculate really, you'll be able to see that shareholding, when it comes to securities, it is a good one. It has a very good return, but it's a long-term investment and not a short-term investment. I know most of us, especially the current generation, will rush towards the short-term benefits. But in long-term, if you look at example, this Safaricom and their performance, you find that it is really performing very well in terms of percentage or return on investment, if you may. So one of the resolution asks shareholders to approve these final dividends to be paid to shareholders. So many retail investments buy Safaricom shares specifically because of consistency in dividends payment. So there's a history behind it. You find that some companies try to just grow the market value of the shares, but others also considers investors, and they pay dividends on a yearly basis. So Safaricom is one of them that actually goes ahead and pays you dividend. So dividend approval demonstrates that shareholders ultimately decide whether profits should be distributed to investors or retained for future growth. And especially you find that if a company has expansions or they are planning to expand in a certain area, or maybe now Safaricom is in Ethiopia, if they want to expand and go to Congo, go to Burundi, go to even South Africa, they might not pay dividends for that year, but use the money to grow the company. If approved, shareholders on the register will receive dividends for the year, even though they did not participate in the AGM, or they did. So they will still receive the dividends, because upon book closure, then they receive dividends. They've locked in. Third resolution is to election and re-election of directors. So directors are elected by shareholders. This is one of the most important powers shareholders possess. And why so? Because directors supervise management, and for the benefit of this company, that's why they elect directors to come and sit on the board and eventually make sound decisions to ensure that the company remain one of a going concern. If directors are ineffective, governance suffers, for sure it does. The board is responsible for strategy, oversight, risk management, succession planning, and protecting shareholder interests, so that we do not have a gap at any given time. Now, there's another resolution for appointment of auditors. This may sound as a routine, but it is fundamental to investor confidence, because independent directors provide assurance that the financial statements fairly present the company's financial position. So strong audit oversights contribute to market confidence and transparency. And you find that these auditors are usually accountants who are under the ISPAC. So they have to really do their job very well, because they have a professional body that governs them. So you cannot just pick any Tom, Dick, and Harry by the roadside. Let's see how it pans out eventually, if the resolutions would really pass. Even so, they have 55% shareholding, so it is highly likely that the resolutions will pass. So alongside the provisions serving certain protections for government of Kenya and the company's Kenyan shareholding means, so many Kenyans still think Safaricom is primarily government owned. That's no longer the case. With approximately 55% ownership, Vodafone has become controlling shareholder. In company law, a controlling shareholder generally has significant influence over the direction of the company, subject to the law, the articles of association, and the rights of other shareholders. So should majority shareholders have greater control, you may ask? This is a central governance question. Rights. On one hand, ownership usually carries governance rights. If an investor owns majority of a company, it is reasonable that it should have substantial influence over strategy and leadership. On the other hand, listed companies also owe duty to minority shareholders. The board and directors must continue to act in the best interest of the company as a whole, not solely in the interest of the majority shareholder. So in this case, Vodafone cannot just ask, because it is a listed company, so they cannot just look out for themselves and their interest, but they should also look out for the interest of the company and the minority shareholders. That balance is at the heart of modern corporate governance. So if these amendments are approved, minority shareholders should understand that your voting rights remain. Yeah, really, basically, nothing is really changing. Your entitlement to dividends remain. Your rights under Companies Act remain. The listing rules continue to apply. And now we have even the Public Offers Listing and Disclosures Regulation 2023. So directors' fiduciary duties remain unchanged. In other words, a change in control does not eliminate the legal protection available for minority shareholders or minority investors. So this AGM is likely to become one of the most closely watched governance events in recent years. Why, you may ask? Because it raises important questions. How should listed company balance the right of controlling shareholders? Should governance evolve after significant change in ownership? How do we preserve investor confidence, respecting legitimate shareholder rights? The answer will matter not only for Safaricom, but also for other listed companies considering strategic investment or change in ownership. So first, ownership and governance are related, but they are not identical. Yeah, they are not identical. Even a majority shareholder will operate within the law and the company's constitutional framework. Yeah. Secondly, a strong governance protects everyone. It protects majority shareholders, it protects minority shareholders, and it protects the company itself. So this AGM demonstrates why shareholders should actively participate. Let your voice be heard if you're a shareholder for Safaricom. Actively participate. Annual general meetings are not merely formalities. They are the forum where shareholders exercise their ownership rights and influence the future direction of the company. When we look at the of Kenya's largest listed company, whatever the outcome, the decisions made at this AGM are likely to influence discussions on shareholder rights, board accountability, and corporate governance across the Kenyan capital market. As investors, governance professionals, lawyers, and directors, we should follow this development carefully, not because they concern one company, but because they illustrate how corporate governance evolves in response to change in ownership and market dynamics. Yes, so if you found this analysis helpful, subscribe to Capital Counsel, where we break down complex legal and governance issues into practical insights. I'd like to hear from you. Should majority shareholders have the right to nominate the CEO of a listed company, or should additional safeguards exist to protect minority shareholders? Share your views in the comments and let's have a thoughtful discussion grounded in law, governance, and the long-term interest of the Kenyan's capital markets. Bye.